Welcome to TradingView in conjunction with Tip TV. It gives me great pleasure, as always, to introduce Mr. Marc Ostwald. He's a strategist at ADM ISI. Marc, very good morning to you.
Good morning.
Right, we've got 5 slides to go through. Let's kick off with the first one, the volume. TradingView Stock Screener in the UK, the volume leaders. I wanted to touch on the banks, Lloyds and Barclays in particular. Now, these stocks, I was looking on the technicals this week, and they look as if you didn't know what they were, you'd be buying these shares. On a macro level, a few words on that. Would you be a buyer?
I think in terms of the reason for the squeeze is you've had the combination of the results from the big American banks and the big investment banks here in Europe, particularly Barclays and Deutsche Bank, where they've had a big boost in Q3 from the volatility in bond markets above all.
Yep.
So they've seen a big boost to trading revenues, which is a turnaround for quite some. Questionable whether it lasts in terms of the boost to actual trading profits. However, as we are going into an environment where we've got steepening yield curves, that is always seen as a big positive for the financial, particularly a sector which has been very beleaguered.
Understood, because obviously a low interest rate environment is bad news for banks making money.
Well, low interest rate is not good, but a low interest rate and a flat yield curve is even worse.
Understood. Okay, so let's move on to gold. I was talking to Edison Research. They've got a sort of target of 1320 there or thereabouts. This looked quite weak on the technicals, and I'm sure I'll get criticism for that. Fundamentally, would you be buying gold?
Well, if we're in a situation where we are going to actually have rising interest rates, particularly long-term interest rates, the case for gold becomes a lot weaker, though that can be offset, on the other hand, by the idea that we've also got rising inflation wherever you look. Most of it's unwind of energy effects, but that's a gold positive. So to some extent, I think it's still quite a neutral trade.
Right.
You've got a positive, a big positive and a big negative there. And so for the time being, I think it still chops around, and the seller that they note there is, I think, of particular interest. I think the other side of the coin is if we've actually got the evidence from various bits of lending surveys which suggests that the corporate sector is not so interested in borrowing banks, doesn't really trust it, then of course you have a different consideration, which is where do we go as a safe haven in a rising interest rate environment? That might be gold.
Understood. Let's move on to the next slide, a dollar yen. Very, very tidy on the charts, and I'm with the bull on yen pairs in general is the headline here. I really like that chart formation. Do you like the fundamentals on that?
The fundamentals are reasonably strong. The problematic you've got is you're still in an interest rate environment between the two, the interest rate differential, where it's more likely that the Fed is going to tighten before the Bank of Japan starts stepping back from its current quantitative easing program. So that should be essentially positive for dollar yen, i.e. for the dollar versus the yen. So you would expect it to go higher. However, if the Bank of Japan does start to indicate, as some recent comments from Mr. Kuroda have suggested, that it's really rather less enthusiastic about its quantitative easing program, that could quite easily turn around. And I know there are a lot of people in positioning terms who've been looking for this rally, but above 105, they're starting, they'll be quite keen to sell.
Understood. I've seen a number of technicians this week who are suggesting an upside target of sort of 107, 108. Let's move on to the next slide, Euro Yen. Sideways at best. I guess you trade the range. I spoke to one person this week. They were expecting a breakout in the next fortnight. I don't know quite what crystal ball they were. Well, that's and the final comment was go with the break. What are your thoughts?
Yeah, I mean, on that one, really, the case for being more bullish of the euro than the yen becomes stronger if we get into an environment where the ECB does start to think about tapering quite seriously, and if we get a pickup in inflation like we've been seeing, the case for the ECB stepping back is rather stronger. The only caveat on that is obviously we have a lot of political risk coming up, in particular focus, the US elections followed by the Italian referendum.
Yep.
And if we start
That's in December, isn't it?
That's
Italian.
in December.
Yep.
And if we start worrying about the health of the Eurozone banking system and the cohesiveness both of the Eurozone and the EU, then I would imagine the yen would be the beneficiary of any outward flows from the euro. The dollar would as well.
But at the moment, would you have a field position?
No, I think it would be one where I would leave
well alone. Okay, very wise. Okay, let's move on to the final slide, the Euro Aussie dollar. According to the volume profile indicator, Euro Aussie is set to move lower. Would you go with that?
I think from the perspective that the Aussie dollar starts to look a more attractive option in an environment where we're looking at higher commodity prices, above all raw materials prices. So not the precious sector, but more things like iron ore, coal.
Is iron ore in the simplest form still a leading indicator?
To some extent. The big thing at the moment is if the Chinese are going to chase this commodity rally, as they typically do, because they're fearful of rising input costs, then that will be definitely very beneficial for Australia. And in an environment where you've got the most recent CPI data in Australia showing that the disinflationary pressures that were there in the air appear to be dissipating, that means the RBA is basically not going to ease any further, and so it holds a really quite healthy interest rate premium relative to the euro, which should be Aussie dollar supportive.
Aussie dollar supportive. We ran out of time. Marc Ostwald, strategist at ADM Investor Services. Thank you, as always. That wraps up TradingView in conjunction with Tip TV. Thank you.